Hi, my name is Alex Carlucci with Gustan Associates. I'm going to talk to you about, do you want to co-sign for somebody, or if you're trying to buy a house and you did co-sign for somebody, or if you have somebody else paying your debts for you, how this all applies. Let's start with mortgages. Let's say you co-signed as you're listed second on the note, and you co-signed for your sister, and she's been there a year and she's made all the payments out of her bank account on time, and now you want to go buy a house. You can, and we won't count that against you. So it has to be 1 year. So you're trapped for 1 year unless you can afford both mortgage payments. So if you want to buy a house right away after co-signing, they're going to hit you for her mortgage payment too. So if you qualify, you're okay. But if you don't, you have to wait 12 months. And the new underwriter for your loan is going to ask for 12 months canceled checks or bank statements from your sister showing she's made the payment on time. And you truly have to be listed second on the note, and you can't be listed first because that makes you look like the borrower. So that's the rule of a mortgage not being counted against you if you're a co-borrower. If your sister, let's say you have a mortgage and your mom has been paying your mortgage for you, and you want to go out and buy another mortgage and she's been paying for the last 12 months, doesn't matter, you're on the note, so they're going to count against you. But when it comes to non-mortgage debt, and let's say you're listed first on the note and your mother's not even on the note, and your mom pays for the last 12 months any non-mortgage debt, student loans, credit cards, car payments for you, we have an investor that's not going to count that debt against you. Most investors require you to be listed second on the note, and your mom, for example, being listed first, and she's paying it. We just have to prove that she's paying it. We have a new program where that debt doesn't count against you. It's called Others Paying Debts For You. No longer requires that person being on the note and listed first. So most banks that you're going to go to are going to say you have to be listed second on the note and then prove that the person who's listed first has made all the payments. If you make one payment, it's dead in the water. And that's true with anybody else, any of these programs where the mortgage, if you're listed second and you made one of those mortgage payments for your sister over that first year, you have to wait a year from that time that you made that last payment, because your sister has to make all the payments on the mortgage for the mortgage one, and whoever's paying your debt has to make all the payments in the last 12 months for your debt. You can't make one payment, and they're going to ask for proof, and they're going to be detailed. Now, if the payments are being paid are less than what's on the credit report, it gets a little tricky. So try to make sure that whoever's paying your debt pays the payments that are on the credit report, or the payment that's due, and don't make erratic amounts of payments, because it confuses the underwriter and they can't verify that what they're paying is what it is. So we want to make it clear as day for the underwriter. Someone else is paying your non-mortgage debts, then we can exclude that debt from your debt. Your mom does not have to be on it. You don't have to be listed second. Most investors are going to say you have to be listed second and they have to make all the payments. We have an investor. Again, no particular person has to be on the note. You could be just you on the note, your own car payment, but your mom happened to be paying it for the last 12 months. Doesn't count against you. I have a guy right now that has $3,000 a month in student loans, car payments, and credit cards that his parents have been paying for the last 2 years. It's not going against his debt-to-income ratio. He's buying a $300,000 house. He wouldn't have qualified for anything if you had hit him for that debt. So if you get a long-term planner and your parents want to help you out and they want to pay your debt for you, it takes, they have to do it for 12 months, and then they won't count against you. It's a great program. It's brand new. You're gonna love it. I just got one approved. The underwriter didn't understand it. I showed her the guideline for this one investor. I talked to the underwriting management team and got it before I submitted it. And the only underwriter working for that bank didn't know that they did this. So, great program. Give me a call. My name's Alex, Gustan Associates. We'll get this done for you. Like this video, share this video. If you got any questions, leave them below. Thank you very much.